Welcome traders, good morning, good evening and good afternoon. Okay, next in the order flow series, we are going to cover what is delta, how to use it, and where are large traders positioned. Okay, so what we're going to cover in this video, we're going to cover delta, the context and the ways that the market can move. We're going to cover some charting examples in there, and you'll see throughout the charting examples whereabouts the puking points are. And then at the end we're going to essentially put all this together. Okay, so this is going to be a slightly longer video as we discuss all of these different examples. We've had a lot of feedback in the Discord and in the videos about putting delta into context, which we've been discussing on the streams. So there's been some fantastic examples in the last couple of trading sessions. So this is why we are now making this video, as delta is very important. Okay, so the general definition of delta is the difference between aggressive buyers and aggressive sellers. Now you see in order flow context and definitions what is an aggressive buyer and what is a passive buyer or a passive seller. And very simply, an aggressive order type is a market order. Okay, simply meaning that you want to get involved right now with either a buy or sell order and you're not passively waiting to get filled on the bid and offer. Okay, another thing that people need to understand is in the futures market, for every buyer there is a seller. Someone always, and I'll repeat that, always has to take the other side. Okay, so this is either for stop orders, for you getting filled in a market order, or if you are sitting on the limit. Okay, if you're sitting on the limit on the bid, someone needs to hit your bid and sell into you in order for you to get filled. And then on the offer, if you're waiting on the offer, someone needs to lift into your offer and buy so that you can get filled. Okay, same thing as if for your stop order, when a stop order is triggered, someone needs to take that other side. Okay, and as we know that stop orders are kept broker side, okay, for client integrity, so they are not visible on a depth of market. And we'll see when we go through the charting examples whereabouts stop orders are likely to be positioned on a chart. Another thing that you need to take into consideration when you are looking at delta and taking into account the daily picture of what has happened and going to happen that session is who is controlling the market right now at that exact time when you're looking at the screen. Okay, is it a market order market or an aggressive market at the moment where buying is happening and price is going up and the offer is not standing in the way, or is the limit controlling the price? Which, what I mean by that is, if sellers are aggressively hitting into the bid and the market is not going down, we're seeing there that the limit bid orders are controlling the price. Okay, so this is important as we jump into the examples so that you can understand how delta fits in, and overall it gets you a view on which participants are involved at each part. Okay, so with regards to the ways that the market can move, okay, we need to cover this because it's extremely important. Now, delta is only one part of the puzzle, and it allows you to see, is the market doing is what is expected? Is if people are buying, the market should be going up, and if people are selling, the market should be going down. Fairly straightforward stuff, right? So what we need to look at is price following delta, which we've just described? Is price being absorbed, so are buyers or sellers aggressively coming into the market and the market is not moving? Is the bidder offer being pulled? Okay, and when you see this, for the amount the market is moving, okay, does it look like the market is moving too much for the amount of aggressive buying or selling that's coming in? What that looks like is orders are being pulled. Very commonly, you'll see this in Globex, which we'll cover when we get to the examples. Okay, and then when you see a one-way train or days where it's just complete one directional, is typically when you have aggressive delta, okay, which is either plus or minus. And by aggressive, I'm meaning really one-sided. We're talking like 15, 20k, and the offer and bid is basically not standing in the way, so the orders are just being pulled. Okay. The other thing to take into consideration is very typically large firms and large traders are the ones that control the passive orders, so they typically will wait to get filled on limits, okay, and then once they're filled, they can then start to press either hitting into the bid or lifting into the offer. Okay, very, very seldomly is retail, from my experience, going to be the one that is waiting on limits. And to be perfectly honest with you, retail, if you look at any court reports, is such a small bearing on the market anyways that it's almost completely insignificant, to be perfectly honest. It's just extra money in the pot for these larger firms just to help them make some more margin, to be perfectly honest with you. Okay, another thing you need to keep in mind when we look at all of these charts and we put all of this together is you always need to keep in your head, right, that if you had thousands of contracts to either get filled or to get closed by the end of this session, where would you like price to go? Because let's be serious, if you're taking thousands of contracts, you're not going to take one tick, are you? You're going to be able to push the market at least an ATR, so a 10 to 15 tick range for that day, and then start to offload those positions. Okay, and you need to take that into consideration because it allows you to see through the eyes of these large firms and large market making participants what they're actually doing. Okay, because they are not getting in positions absorbing 5,000-6,000 contracts to then take 1 and 2 ticks. That's just not happening. You know, is the juice has got to be worth the squeeze, as the saying goes. Okay, and when you take all of that into consideration, whereabouts are either the aggressive or passive order participants, whereabouts are they going to puke, and whereabouts are they going to be covering, okay, and their positions are going to be under pressure. Because when they cover and get out of their positions, regardless of what side it is, that instantly provides liquidity for the other side to take profits and for them to get out of that. Because as we covered before, okay, for every buyer there is a seller, someone always has to take the other side. Okay, so when it comes to the puking points, this is where you see sweep of the highs, sweep of the lows, and where it reverts back in, is because these areas are inflection points in the charts where orders are going to be congregated and these large participants can essentially start working the book to get out of their positions. Okay, so we've got a number of different examples to run through here. Okay, we're going to cover things like buyers been absorbed, sellers been absorbed, offers being pulled, and exaggerations of those price movements. Okay, one thing to call out before we jump into the analysis of this. There is a little bit of scaling issue with this, so it doesn't look as pronounced. So it's easier for you to spot when it's actually in your charting platform, because these are condensed a little bit and it doesn't look like the delta bars are as big as they really should be. So I just thought I'd call that out. Okay. So first things first with this, when you're looking at delta, as we discussed, delta should be following price. So very simply, when delta is going up, price should also be going up. Okay, but there gets a point where if delta is cracking new highs and making a high of the session, right, price in theory should also be making a high on the session, right? That's just in parity. And if it doesn't do that, then you need to be scratching your head and thinking, okay, what's going on here? Something is not in line with what is happening. that is your sort of starting block, okay, for you to pick apart the puzzle and determine who's in control of the market, what context is going on, what time is it in the day, is this expected for this time of the day? As example, is it lunchtime, where we typically see some back and forth, no real direction and chop, or is market on close about to happen? All of this should be factoring into your decisions. Okay, so we can see from this chart here that delta down the bottom, okay, is now just approaching the high of session, okay, which is here. This is price at the moment where we're seeing aggressive buying coming in. However, price is pretty much flat. Okay, now what this tells you is there is a wall of sellers on the limit that you'll be able to spot in the DOM that are essentially gobbling up this buying. They are saying, nah, this is not going down. Okay. And what then needs to happen is the longer price then sits in a range, okay, where is the puking point for both the sellers that have absorbed and the buyers that have aggressively lifted into the offer, okay? And what you're typically going to find is the next obvious point of a range, so we can see here, okay, this is where the buyers that bought here are going to be covering. And if sellers were the ones that were under pressure, you're going to see some covering up at this high here. Okay, so the offer is essentially absorbed all of this buying. We then press price down, and of course it goes below the low. And you may be thinking, why? Well, this is because, very simply, these guys that bought in here, they have to cover here, okay, and it provides a liquidity again for the people that absorbed to start getting out of their positions. So this is the whole premise of this. This is a mini puking point where they then have to get out of their positions, okay, the people that bought here. Okay, so on the opposite side here, we then see where essentially the selling is being absorbed. Okay, we can see that delta is approaching the low of session. Here you can almost call this a divergence, but I think it's a little bit more theoretical and bigger picture stuff than just calling it a divergence. So delta is approaching the lows, yet price is not. Okay, we can see this depicted by here, and essentially buyers at this point in time are absorbing the selling that's coming into the market. Okay, and then when we get to this point in the chart, we can see that the offer is slowly starting to be pulled in the market, okay, which you can see here. Here the offer gets pulled, there is not that much buying coming into the market, and we are gradually working its way higher. This is a very common tactic that market making firms will do. They'll press into the bid to get out of their positions, okay, down here, then they'll pull the offer because they're already net long, and they can essentially start feathering into the offer to take it above, but then they're pulling the offer at the same time. Okay, now the two previous charts that we have looked at is regular trading hours where more volume is carried out. And if you don't know this yet, you know now that Globex literally has a fraction of the volume that the regular trading hours has. Now, just to give you an example, within the first probably 60 to 90 minutes of the regular trading hours, there is more volume in those 60 to 90 minutes than there is of the whole Globex session combined. Okay, and this is very, very common when you look at this chart here. What happens in Globex? Okay, and what you essentially can see is delta is 262 at the far right of the chart. There is absolutely no direction and no real directional buying or selling, yet look at how much the price is moving. Okay, this is very common for Globex, and how the market moves in this context is they essentially just pull bids and offers continuously. This is just algorithm time where they have a fantastic field day. And what you'll notice is when it gets to the hive session here, they just wick it by a few ticks, pull it back into the mean. They carry the same here where they drive it down, take some orders, pull it back into the mean. And then of course, they then take the hive session again and then pull it back into the mean. There's not really been any aggressive buying or selling happening here. The market is just moving by orders being pulled. Okay, we can see a little bit more of aggressive selling coming in here, but for the most part, this is no direction, delta is flat. And this is a very common theme that you'll find in Globex, because there's no volume that really happens there, and the market very typically will just revert back to the point of control for the session or the previous session. Okay, point of control. So completely different order flow and perspective in Globex, and then you need to be aware of that. And then when you go to the regular trading hours, these high and lows become reference points. So say this was the high of overnight, this is the low of overnight. These become reference points for when regular trading hours happens, and then you need to decide how does the delta then come into play for that. Okay. So this is actually from the other session. If I remember correctly, this is from Thursday's session that has been recently carried out. Now, if we note the passive orders are controlling, okay, the offer is in control. So same theory here. We see a big bid that comes out, okay, and then we can see a gradual buying that comes in. However, note that the offer is absorbing, and we can see that by delta made fresh highs in the session, however price has not. Same theory that's going to happen again, where the people that have bought here at open are under pressure here and under pressure here. And then notice we then see a cascade that happens. They aggressively hit into the bid, take price below, and then we see a cascade. The cascade is then going to be the buyers have to cover, they become sellers. Okay, we then have large participants are going to be hitting into the bid at the same time, and then we have fresh sell orders that come in, and this is what you see when you just see a complete capitulation of price, or dump as you would call it. Okay, but this gives you a context and a key and clue that this can happen, because delta is not following price. That is your first clue of the jigsaw. Okay, now to compare this, this is what I like to call the one-way train. Okay, very obvious to spot, okay, when you actually put context into play. And as we discussed, if you're fading the world and you are a mean reversion trader, these are the type of days that are literally going to wipe you out. Okay, so you really need to be careful and factor all this stuff I'm saying in here to keep you right and to keep you out of these type of day types. Okay, we discussed some initial balance rules in the streams, so I would definitely reference that just to keep you out of trouble. Okay, so what we can see here, I've cut off the exact number of delta here, but this is going to be a day where we're 15-20k delta to the positive side. Notice it's just a continual stream of aggressive buying that's coming in, and there is literally no selling that's happening. Okay, we can see these tiny little pullbacks that are just been absorbed on the bids. Okay, so when you have aggressive buying participants with no passive offer in the way, you have this one-way train behavior. Now, in these types of days, you should not be fading. You're just going to get yourself into trouble. And again, delta is going to be your clues to keep you out of trouble. Okay, so there's different variations on the theme here, and different variety of what price is doing versus what is delta doing. Okay, and every single type that we've discussed here has a different meaning and different context for you to then execute for your trade plan for that session. Okay, Now, we need to put all this together, and I'm aware of trying to blast through this as quick as possible for everyone, okay? But delta is extremely important for you to know who's in control of the market at that time. Is it expected that either prices to go up or down depending on what order flow is coming in, okay? And then you need to build your playbook around what is happening right now at that exact time, okay? So a few points to bear in mind here. 95% approx of all orders of a specific day are closed in that session, okay? They're day trades, they're speculative positions, okay? And if someone is extremely long on that session, a big firm, they need to start working the book to get out of that position. And they're going to do that, okay, when the volume is much higher. This is why market on close tends to offer some volatility, because these firms need this behavior in order to start getting in and out of their positions, okay? And the times when volume is expected, price will go to liquidity areas. Okay, this is where on the stream we always draw out these rectangle boxes, which is essentially pressure points on the charts where orders are going to be congregated and price will drive to these areas, because these large firms can just spend a little bit more money to drive price to these points so they can start getting out of their positions. Okay. Now, some context for this, because I'm aware you're probably thinking to yourself, well, what counts as a one-way train day? What is a relatively balanced day? Where does all this fit into actually the delta that's been transacted for that day, and what the numbers are? In my opinion, when you are approaching the sort of 15 to 30k delta, it's extremely one-sided. Okay, so be careful on those days. They're the days where if the delta is that high and then the opposing limit is weak, you will get one side action massively. So no fade on those days. Okay. However, again, if you're seeing that this amount of delta is coming in, but the limit is strong and absorbing, then there is going to be a lot of pressure put on the aggressive participants in that market because they've just been absorbed. Okay, and if they get pressure put on them, they're going to have to liquidate and get out of their positions, which again then causes the magical cascade that we discuss. Now, very typically on a Monday or Tuesday, you're going to see ES somewhat flat, which is a kind of plus or minus 5 to 10k, which when it comes to a higher volume interval, that can change in literally 5 minutes. As we noticed from the stream recently on Friday, that 5 and 6k delta can come in 5 minutes. And if price doesn't react to that delta, all of that buying or selling is then under pressure. They need to start recovering, okay? And you need to almost use this very much so like an elastic band, okay? So if a huge amount of orders are coming in such a short space of time, they need to be closed in that session. Okay, so if you've got 2 or 3 hours left in a trading session and there is a massive amount of buying or selling orders come in delta, they need to be closed. Same as the limit order as well, because again, back to the same point, for every buyer there's a seller. So if there's 5k delta, okay, that's been executed positive, so they're lifting into the offer, and the offer is then absorbed that, we then have 5k short and 5k long. Okay, both of these positions need to be closed that day. So where are they going to drive price to in order to start working the book so they can get out? Okay, so you need to consider that. And when that happens, you need to think, where will price go to so that they're under pressure and can be liquidated? And as we know, it's so common when you guys watch the stream, where when it comes to these high volume areas, they put some aggressive participants come into the market where they drive price up, okay? Then the offer will stay strong, They'll start absorbing, working, and getting out of the long positions. Then they'll just hit it back in to the mean. It's extremely common. But delta, when you're looking at all of this, gives you an idea of what is going to happen next, and then you utilize the depth of market to see if your trade plan and trade idea, that the play that you're thinking, is happening. And if it does happen and everything is in line, you need to step up and take that position without hesitation and without fear. Okay? But it needs to be within your allocated time window. Okay? So I hope this has been beneficial for everyone. I'm trying to keep these a little bit more short and sweet, so that you're not having to sit here for 50-60 minutes to discuss delta. So we cover all this on a day-to-day basis in the stream. If you've got any questions you have about this video, please sure and leave a comment below. Do all the YouTube things for me, okay? And I hope you guys have a great evening or a great morning, and I'll see you in the next video, okay? Peace.